All right. Hello. Oh, yeah. All right. Hey, what's up, everyone? Welcome to the channel. I know I'm still waiting for people to join. I don't know if I'll have anyone join within the next 10 minutes or so, but I'm going to go ahead and get into it. Today, we're going to be talking about me basically getting ready for the Ftmo challenge. I've been dropping a lot of videos and stuff to my Facebook and Instagram stories about me getting ready for the challenge, just posting like live trades and stuff like that. But yeah, now I'm just gonna show you guys how I'm getting ready for the challenge. I will be doing some live back testing, gonna be doing some I don't know, just like talking about my strategy overall, like how I plan on managing my risk and things like that. I'm going to be doing this up until I take the challenge, and I may even record some of the trades live, but we'll see. That's added pressure that I really don't think I need while trading, but depends on how I go. I might try it a couple days here and there with some live trades for the challenge. You don't see that too often. Let's see what we got going on. By the way, I hope you guys like the new setup. I worked pretty hard on it. I got the whole live chat thing going on. So yeah, drop a comment below. Go ahead and subscribe to the channel if you haven't already. I'm trying to get up to 1,000, hopefully by the end of the year. So go ahead and subscribe today. I'm going to be dropping some good knowledge for those of you that actually trade. It's not many of you, at least on my social media. So hopefully we have some people tune in from YouTube. Let's see. Show you what we got marked up. So yeah, I'll go ahead and do like a little quick markup on like what's going on with the market now. I have not looked at the market at all this week. I think I peeked at US 30 a little bit, US 30 in Bitcoin, because I saw Bitcoin was at an all-time high towards the end of last week. Oh yeah, Bitcoin still pushing up, still looks really bullish. Yeah, this is like an area I had price projected to bounce off of like a couple weeks ago. Price ended up breaking through it a little bit and then pushed up. These type of things are hard to determine when it comes to cryptos and things like indices, because it's not so technical. Like with currencies, you can trade them with just like a technical analysis, which is what I usually do. So it's easy to make those long-term projections on like specific pivot points in the market, if that makes sense. Either way, we're gonna hop on some currencies. First, I'm gonna look at US 30. So where is it? Yeah, this is all from some back testing stuff. All right, so this is on the daily chart. US 30 pretty much making new highs as well. I'm not a hugest fan of trading markets like this, where you don't have much to the left to determine where you're going to take your positions, especially people that trade like things like support and resistance. There's no data to go off of. When we're in basically when we're in markets like this, where I'm looking for a price to either like retrace heavily, so that way I can actually go off of past data and find some entry points. So if price continues up here, I'm just gonna have to keep trying to find like some bullish order blocks to trade. Let's see. So yeah, not the hugest fan when the market is like trending in the upward direction like that, like with nothing to the left to look at. I mean, good from an investor standpoint. Like let's say if you have stocks purchased under some companies on the US 30, then that's cool for you, feel me? But from a day trading perspective, it's not all that great. So GBP USD is my main currency pair I'll be trading. So GBP USD, US 30. I'm not going to be trading US 30 too heavy until we start making some retracements, but I'll have it marked up, see if I can find any type of setups on it. JPN 225, I'm hesitant on trading this one heavily. I just started trading it. It's just something else to trade. where most of the moves happen during the Asian session. As you guys can see here with my sessions indicator, I have YouTube videos on me using this indicator, but basically just highlights the New York and London sessions. So right here we have the London session, then you have the start of the London session, then you have the start of the New York session here. Let me zoom in a bit more so you can see. So this little highlighted blue area. So you have the start of the London session, then the start of the New York session. So this is the New York-London overlap. And this remaining session is basically the end of the New York session. And this white area is like the Asian session and like the Frankfurt session or whatever. But I don't have those highlighted. So the Asian session happens somewhere in the white. And as you can see, JPN 225 makes most of its big moves during, like, outside of those sessions. So I can get off of work and then go trade JPN 225 because I'm Pacific Standard Time. So I get off like 5 p.m. on a good day. And that's basically like during the Asian session. So you can catch some nice moves then. So this gives me something to trade outside of those sessions if I want to catch some more moves, you know, especially when US 30 isn't very tradable. But we're gonna see. I'm gonna mark it up, see if I can find any good setups. I marked up one last week. I think it was Friday. I marked up a decent one, I believe. I have to look back on it. And I don't trade Bitcoin. I just invest in Bitcoin. I actually buy it through Cash App and just hold it. So I don't actually day trade it. These are just some of the things I like to look at. So we have Dogecoin here. I think Dogecoin long term is bullish. Everyone has their eyes on Shiba Inu because it just did this. I didn't realize it made a second push in the last 2 days. Nice. Probably in tight. It's gonna cause a lot of people to hop in the market, but I think we're gonna see a heavy retracement like every other crypto has when it shoots straight up like this. Like, the price always has to come and correct this from a technical standpoint. Who knows when it'll happen? We could continue up a little bit more before we come fill in some of these areas. Might get another push there, but eventually price is gonna come in and fill this for sure. So I would say wait if you're looking to buy Shiba Inu long term, but if you're just trying to catch like a quick small percentage off of it, then it's probably okay to hop in now. But you never really want to buy high. You want to buy low. That's when you have the best price. It's like a supply and demand thing. You want to buy when the price is low and sell when the price is high. Like the car market right now, you have dealers and the used car market. Everyone's buying these cars for so much just because everyone's willing to pay that. So it's a seller's market right now. You don't really want to be buying in this market. A lot of the people buying now, they're planning on buying and selling because the value is up so much. But the profit margins are very slim. Best way to make the most profit is to buy when the price is low, of course, and then sell when the price is high. So it's theoretically the same thing when you're investing in cryptocurrencies and or like indices and stuff like that. This is just from an investor's like mindset. And occasionally I look at GameStop, like all the pump and dump stocks. A firm made a beautiful push recently. My coworker was telling me about this before it happened. I wish I would have bought some, but that's how it always happens. Oh, wow, Tesla is literally at an all-time high as we speak. That's crazy. So we're gonna be seeing some things about Tesla in the news. But anyway, so Tesla is pushing like crazy. I look at AMC every now and then. I recently added Apple, but Apple is pretty high. So the markets are up on almost everything. You have Shiba Inu pushing up. Bitcoin is literally broke an all-time high in the past month or so. In the last few days, Bitcoin broke an all-time high, and US 30 and all that stuff is making all-time highs. So the markets across the board for at least US things like stocks and cryptocurrencies, and well, crypto isn't a US thing, but I guess the US dollar is pushing up. It's definitely a seller's market. Everything's up though. So if you're looking to invest in anything long term, don't buy now. But that's just, if you take anything out of what I just said, then don't buy anything right now, in my opinion. But things can very well double even before it decides to retrace. But from a mindset of probability, it's not good to be buying right now. So anyways, all right, let's go ahead and get into the trading stuff or whatever. So I'm just going to be doing some back testing, and I'm going to go ahead, I guess, give like a little forecast on where I see GBP USD going for this week. So I usually start my analysis on the daily chart. Let me get this a little bigger for you guys, since I don't have anyone in the chart in the chat. Yeah, there we go. Got that a little bigger. All right, cool. So we're on GBP USD. So sometimes I'll start by looking at the Dixie to US dollar, basically like the dollar index, showing you like the live value of the US dollar. So right now it's 93 cents right now. But we have been bullish on the dollar since about June. For those of you that don't know, I'm not going to try to stay on the beginner stuff so much. But basically, saying we've been bullish on it is saying that the price has been trending in the upwards direction for the past, since right here you see at the bottom here it says June. We've been bullish on this since June, and I can even get rid of this and you can just see it. So clear as day, you see this is moving up. So we've been bullish since then, but overall long term since, let's say here, if you want to say here, like April 2020, we've been bearish in a sense, because let me show you here. So this is how you do a top-down analysis on something. So overall we've been bearish. So you can see we've been moving down. This could very well be making a lower high and continue to push it down, or this could be a pivot point and now we're going to push up and potentially break this high. But there's not enough confidence in me to say that this is going to go push up and break highs. I can see this going and breaking lows before it goes up in here and breaks all those highs, you know. So long term, I'm bearish, but from a day trading perspective, I'm bullish. So that's just something to keep in mind. So if you see the market starting to push down all of a sudden and it's been pushing up these past few months, you know why, because we're in an overall bearish trend. So don't be surprised. You just have to, it's just like a mental note in the back of your head that the market can very well reverse at any time heavily. And you just see a lot of bearish days there. So right now, dollar is pushing up. So when the dollar is pushing up, that means theoretically GBP USD can be falling down. So you see since May 2021, going to Dixie, it's been falling down, and this one's been going up since the dollar's been going up since that time. GBP USD has been going down since that time. So you're literally just trading the difference in currency. So if you were to pull up a chart of like the Great British Pound, the value of that, and you see the US dollar falling and you see GBP USD going up, then you would expect the chart to go up in that sense, because the value of the Great British Pound compared to the US dollar is going to push up. So that's basically how you use another pair as like a confluence when you're doing if you just want that extra, I don't know, that extra certainty that price is going to do what you are predicting to do based off of the trends it's making in different currencies and stuff like that. But I don't rely too heavily on that. That's just, again, a bunch of mental notes in the back of my head. So when I'm taking certain trades, it gives me the added confidence to take certain trades. I'll show you guys what I mean later instead of just talking hypotheticals. So anyways, GBP USD, since May, we have been trending bearish. Yep. So although we're trending bearish since May, we can have some bullish days, or maybe like a bullish week or so, or two. So since September, we've been pushing up. So we could potentially see price go and break this high before it goes down and continue the long-term bearish trend. Well, not so much long-term, but it's been happening since May. But right now, since price retraced a bit, I'll probably be looking for buys somewhere in this area. Price is already pushed up somewhat off of this retracement. Can price fall more before it goes and breaks this high? It can. Like, you just have to be accepting. So it's okay to have a bias in what the market is going to do, but you have to also be flexible in what the market wants to do for that day. Each one of these candles represents a day of data in the currency, whatever. Just price decided to push down for this whole day. So you had a down day for the most part. Price opened here in this day, went down a little bit. Then you had a bullish day, but then it came back down. So that was just an up and down day. Those dojis, these big solid ones, price pretty much headed in one direction mostly for that day. So we've been pushing up for the last few days. And currently this day is started off pretty heavily pushing up. So we can see if we can catch a move. Price making a small retracement, giving us a decent entry to continue to take this to the upside. If it wants to go and take out this this high there, it's definitely a possibility. Or I could potentially see price coming down a little further, breaking a low, and then pushing up a little bit more to break this high. So it's all a possibility, but some people trade trend lines where you can mark this up. You see price bouncing off of it, and price could continue to go down, but I don't know. Price has already started falling down since about October 20th or so. So in my mind, I would be looking for sales more. I would be looking for sales to get into these better positions for a buy, maybe. Yeah, I'm definitely bearish on this. All right, and so the thing that really gives me the confidence in saying which way the direction is going is by looking for order blocks. So if any of you trade like smart money concepts, basically it's kind of like supply and demand trading. You just look for areas in the market where there's imbalances and where you have like your fake outs and stuff like that. I'm not gonna try to teach all of it now. I'll be talking for hours trying to break that strategy down, but you could just go ahead and watch me mark it up. Yeah, let me mark it up and then I'll just explain why I did what I did, instead of, because I'm like losing focus trying to discuss it and mark it up. That's the 1 hour chart. Whoops. Let me delete that. Oh, we already got a bounce off of that. Something lower. Nothing crazy clean. No imbalances. So if I'm ever looking for price to move, like move in a certain direction, I don't want to see a bunch of imbalances like this where price barely came back up here before it decided to continue down. Like you have these gaps, like price the day before or the day after didn't come in that area at all. So I would call that an imbalance. So I believe price has to fill these type of areas, at least to a certain degree. And I feel like this is a big enough gap for price to return. And like this is a huge imbalance. So like the day before, couple days before, price didn't go there all the way down here. So I would have saw price go in there for sure to at least fill in some of this imbalance before going down. And with that being said, looking over here at this trend up here, most of this stuff, you have wicks like all up in this, a lot of up and down movement. That's clean movement. You have some imbalances like up in here maybe, but that's not too major compared to everything else that's been pretty much it. So I will have the confidence in saying that this can go up without having to retrace. But we're gonna see what we got. So we're on a 4 hour. Oh yeah, that's one I already marked up. See, that would have been a beautiful trade. I might have to drop down one more time frame because I'm not seeing a clean buy setup. At least on the 4 hour. On the 1 hour, I did see a couple things. Yeah, You see this huge imbalance in here? Price kind of mitigated some of this area and pushed away, but I think it can continue to come back down here and fill in some of this area. So the thing with this strategy, there's a lot of waiting. You have to be patient with this type of trading. So basically these areas I'm looking at, although I have a bias on where I think price is gonna go overall, for the last few days we've been pushing down. Since the 20th, the last 5 days price has been pushing down, obviously. But if you look over here, since, what did we say? I believe like even all the way since here, like September, mid-September, price has been pushing up. So I can see price coming in here and then pushing up. So we're falling down, so I don't see a good trade to take. You see all these wicks? That's not clean. I can't look for an entry off of that. And I usually do not like dropping below the 1 hour time frame for order blocks. So honestly, days like this would be a day I just probably wouldn't trade. So since there's not a clean setup until price gets like all the way up here, but I think if price breaks this high, it might continue up. I wouldn't be looking for it to go down if it goes all the way up here. We might catch a little trade off of that. You might see like a slight retracement like this off of that area, and then price will go and then break that high, you know. Yeah, so that's what I'm looking at for GBP USD. If I really wanted to be impatient and take a trade, which I'm not gonna do, and all this imbalance in here, I can definitely see price going back down here. It's one of my order blocks I was talking about. The ones I like to draw up the most, if you have like a clean little down move that breaks some type of lows, and then you see a push up to then break those highs. That's a good order block for me, especially when you have like an imbalance like right before it. Like a lot of times I'll see price like go and give me a beautiful pivot off of that zone. Let's see what we got. Yeah, honestly, yeah, I'm gonna stick with that. So this is the way I look at my potential trade. So like I said, price can either come here, go up here, slight bounce there, then push up, or price could then continue up from, like you see the last couple of days we pushed up. We've been pushing up, so price can go there, slight retracement, break this thing and go completely up from there. So this is what I mean by being fluid with the market, where you can see price going here, and then we already got that one. Price could return. All right, we're gonna leave that one and down. So you can look at these retracements as like deep retracements. I'll make these different colors so you can see. Oh no, I can't do white. So we got blue, black, and red. That should contrast nicely. Yeah. So that's honestly probably what's gonna happen there. Might catch a trade off of this area. Even that order block, maybe. Doesn't look so bad. Got a nice bounce off it already. See this order block? Price pushed down, broke some type of low, then pushed up heavy, left it in balance. I usually take an entry right here at the open of this candle there and push up there. But another thing is, for the big moves off of the order blocks, usually my 4 hour and daily order blocks, when you have a bounce like that and then price does whatever and then comes back to it, usually like right about where it's at, you're gonna see the big push. So I think that's taking out all this liquidity. Everyone trying to buy it up is just stopping everybody out, and when everybody thinks it's probably going bearish, it's just gonna push off hard in the other direction. So I love those trades. Usually the big like big risk to reward trades I see. It's usually from setups like that. But yeah, let's see. So this is honestly what I'm looking for with GBP USD. I don't want to overcomplicate it. You drop your order block. You see where price is going. It's not all about like where you think price is going. So right now, from a day trading perspective, I'm gonna go with what's happening since September instead of like what happened in May, because you have a lot of up and down days and if I'm just like, oh, I only want to sell because we've been bearish since here, then it's like it's not probable that I'm gonna be winning most of my days. I'm gonna lose half the days honestly if I'm just selling every single day. But from a day trading perspective, we've been going up since here, but just realizing if I do want to catch those big RR trades, it's gonna be in the downwards direction. There's no big trades going up. Maybe here, here, and here, but big trade there, big trade there. It's about equivalent to that. Even bigger trade there. And this is almost equivalent to here. So if we start breaking this high, and then this high is broken right here, then that's when I'll start looking for price to potentially maybe continue this big upwards trend. So this is what it means to do top-down analysis. This is probably the hardest part, is determining your bias for the day as a day trader, but realizing the general direction of the market for the past week, month, and hell, even the year, depending on what you're trading, especially if you're like a swing trader. All right, so let's go break this down. So yeah, honestly, draw my order block. I'm not looking for, if you notice with these trades, since I'm looking at price to continue to going up like it's been doing for the past like month and a half or so, then I'm not looking for a huge sell-off on this area just yet. Like if I was looking for a huge sell-off to continue this bearish trend that we've seen the past few months, it would be, let me start on the daily. Yeah, I'm not looking for a huge push off of a 1 hour order block, although it happens sometimes, but I'm not looking for that. These big wicks, there's usually good opportunities to like short the market or look for pivot points in the market when price get up into these wicks, because that big push and big push down, there's an imbalance in there most likely. Yeah, see, there's an imbalance there. Price came in, filled most of that. So that's not an order block I would mark up, in all honesty. This one I would. Wait, I think price already came that low. Yeah, it's definitely gone that low. Yeah, see, the bearish order blocks aren't being respected, at least the smaller time frame ones. This is a 4 hour actually. It's not being respected like we want it to. But that's not the cleanest one to me. It's a decent one though. It's definitely a decent one. Yeah. Yeah, we're definitely bullish right now, so I'm looking for more buys. I'm not looking for a big move off of this just yet. Market isn't telling me it's ready to push down heavily. So honestly, although price already mitigated this area, if it does want to fall down before it goes up, let me remove these lines so you guys already got an idea where I'm looking for price to potentially do. So remember I said you get that second bounce on that zone. This one's kind of sketchier. We didn't necessarily mitigate that block there. So I wouldn't be surprised if we saw another bounce in this zone and then we go and break that high. That's probably what I'm leaning a bit more towards now. So if I wanted to trade right now, like going based off of this, I would be looking for a sell, you feel me? Although we're pushing up for like the last 2 days, I will look for a sell right now because I think that's where price is gonna go. But a matter of selling is like, where would price sell off at? No clean order box or anything until we get up here. So A very important thing with trading is knowing when to stay out of the market. So I'm going to stay out for this day, see what price does. I have my zones marked up and where I'm looking for decent moves. I'm looking for either a nice buy off of this or a nice buy off of that. Yeah, that's what I'm looking for. So yeah, until the market looks bearish for, let's say, for like the past month and a half, then maybe I'll be like, all right, I'm looking for a huge sell off here. You know what I'm saying? Like the moves I want to catch are like the huge days like this, where you could catch an entry like this and take it up for the whole day and get a crazy risk reward. Yeah, a lot of that for the buys. You got some short-term sell-offs, but the buys, you could have caught this down here, swing traders, and held it all the way up. So that's what I'm looking for, the buys right now. So until we look like the sales are gonna be winning, and like the day-to-day, you feel me? Then I'll be looking for sales. So that's one way to just look at it. But then again, every time you go and mark up your charts, just go and mark up these huge zones on like your daily time frame, weekly maybe. I don't like marking up the weekly, to be honest. So I mark up these zones and I do it a different color. I do it blue. So for my daily and my 4-hour charts, I do it blue. 1 hour order blocks are like a light blue. I call it my order block refined. It's like this color here. So that way when I'm trading in the day-to-day, I'm not getting all caught up in what's going on here when we're approaching a huge zone like this where price could fall off heavily. So then I'm missing that big push down to continue this big bearish trend. You know what I'm saying? So leave those marked up, like mark them up, sandwich price basically, because price can go up or down, remember. So if you have a huge 4-hour order block or something like that, or like a daily order block, mark it up above price. And no matter how low, wherever your next good one is that you want to mark up, put it there or whatever. And lock it in. So you can right click on trading view and hit lock. So nothing you do is going to drag this out the way while you're trading. So you can trade your way here for the next couple of weeks. So when you get to this zone, you realize like, okay, I can start looking for price to potentially reverse here or somewhere around this zone. And then the market's going to give me some big pushes up, and then my bias will potentially change. So it's just being aware of your trading. Don't get too caught up in the day-to-day. It's something scalpers, like scalping is not the easiest thing. It's easy to catch like a quick little move. You see price pushing up for like the last hour and you hop in and you're like, okay, I'm gonna ride this hour up, catch some pips, whatever. It works out. But like for those of you that do scalp, like trying to catch actual moves is hard. Scalping like 5 minute, 1 minute time frame, I can go in there and show you guys that like it's hectic. You see all this up and down. While there's money to be made here, but you also have to account for spread and things. Okay, there's not much money to be made in that. That's 5 pips. It's like a 10 pip move. That's like a decent move for a scalper. 10 to 20 pips. Like this right here, they can make just as much as I do in like 2 days in just literally the course of in less than an hour. But it's hard catching those moves. It's not easy. It's a huge toll on you, like mentally and emotionally or whatever. Like trying to catch those moves, it's not easy. But everyone that starts trading, like scalping, is so ideal because of the potential money to be made in just minutes or less than an hour. You feel me? But I like to just look at my charts for probably like a good 30 minutes to an hour or so. Sometimes a little longer. I'll probably play some games if I catch a trade or something. And I'll just watch the market, especially if I'm expecting price to make a move to one of my zones, like during that session, you know. So yeah, yesterday was pretty bearish. Day before was pretty bullish. we could very well continue this little uptrend here and break this high, but I don't know, that's too easy. You know what I'm saying? You got this double bottom here. Price could retrace a little deeper into this zone and then give us our up. But then again, we got another one here that it could bounce off of, so it could do something like that and then give us a big push up. So yeah, those two are probably what I'm leaning more towards right now. And if you really want to, some people trade like these order blocks and stuff are being mitigated. These down pushes, you see price break high, come back down, mitigates the area and continues on. Or you can even use like a Fibonacci or something like that. Swing low, swing high. Usually I like to buy around like the 50 or so, or off of a fib level. I don't buy below this 6180 usually, unless it's like a higher time frame order block within that. So the fib is like a retracement that I mean is a confluence that I use. But yeah, I'm just rambling right now. But if you really want to, you can look for a trade off of this. Yeah, price push down, break this low over here, go up and break a high, left an imbalance. That's a good zone for me, but I don't like trading the lower time frame ones because it seems like the probability of price pushing from those like nicely isn't that high. But so yeah, you could very well catch this and continue up. And like me, things like that, I trade the open usually, low risk, because sometimes you get some great mitigations. I don't just set up buy limits. If it was that easy, then everybody would be trading this. But I mean, you can technically set up a buy limit if you want to be very liberal when it comes to that, like a stop loss, something like that, maybe even like this. And you guys probably wonder why I do that. It's because price doesn't always mitigate exactly at the open or the 50% of the order block. Sometimes you see a deeper retracement into it. It can make like an equal bottom here. Sometimes it goes smidge lower. It's usually when it's like down in this area, that's like a low probability like retracement. So the open and the 50%, those are like higher probability. So that's why you hear people speak of them. But price comes a little bit deeper than that 50%. Probability isn't so high. So I'm usually looking for like my good moves at the open, between the open and the 50%. That's like my area I'm looking for buys, and sometimes even like a few pips before. So if I'm looking at price action come down and I see it starts to stall and I see like a push down here, it doesn't necessarily make it all the way there. Price wants to come and break this high right there and continue up. Let me zoom into that so you can see. Let me move this. So you see this push down, this big spike, and then price comes up in here and breaks structure. And as you guys see, I don't usually trade with indicators, but I've been using the moving average as the 50, was it the exponential moving average, the EMA. I use the 50, and usually on the 5-minute time frame, when price starts heading towards my order blocks, I'm usually around the 5-minute looking for my entry. So I'm not saying I'm sitting here watching the 5-minute looking for my trace and everything like that. Looking at the higher time frame, and I'm just looking for my entry on the lower time frame. So I'm just looking for price to start to stall, and then you might see like something like this price wanting to push up, probably entice some buyers, and you get a huge push down, and it usually just gets people out the market. They're not really looking to look for that buy now, because price pushed so hard down and stopped them out again, even though it shows some hope of maybe going up, or I don't know, whatever they do to entice buyers or sellers to create liquidity and then go stop them out. You don't want to be buying here. You want to wait until these zones, you see like a push down like that, push up, break a structure right there. This little line I have right there, that's basically price breaking that high. And then if I have like my 50 EMA going, I use that as a confluence, so wherever that's at. And then once price breaks through, let me draw that a bit better. that 50 EMA as well. I'm already on it. Let me see if I could draw this right. Yeah, so right now price is below the 50 EMA. It'd be something like this actually. No, price would be below it, not above it. Yeah, something like that. And then price goes and breaks above that 50 EMA, and it broke structure, and you got this wick, and it touched this order block. That is the highest probability trade I can have, and that's when I'm going in on it. And my entry is something like, so instead of like just trying to set up a buy limit and not getting stopped out, or you could do what I used to do and take a few L's before you finally catch that winner, but that's gonna weigh heavy on your psychology, and just set up like a high risk to reward buy limit or something like that there, and then target an area like this high, not even the high, you can go like lower. I don't target highs and lows. I usually go a bit before or below them. Price will play with you sometimes before it then goes and breaks it. So me taking a 6.91 risk to reward or 9, I'll be happy with the 6. You know what I'm saying? Can't be too greedy. So on a trade like this, I'll buy it here, stop loss somewhere in there, and I'll target like an area like this. Let's see, something like that. That's a pretty fat stop loss, but that's just going based off of this. Usually I target like a 1 or 3. That's like at least what I target. So it really looks something like this depending on what price actually looks like, and I'll target there. And if I do have a second target, or if I'm almost certain price is going to break a high, then maybe I will like target a higher. But usually I'm like somewhere in there, targeting like a 1 to 3 or something like that. And then let's say I get that break of structure before that push through the 50 EMA, I'm already in at the break of structure. Because if I got the wick, the touchdown in this area, sometimes I'll buy even down here. Like remember I said low risk? I'll buy there if I see like price coming there and it's starting to push off of the area a little bit. I'm in it, and I'm low risk. I'm not gonna tell you guys necessarily where I put my stop loss in this case. If you guys want to know like my full on strategy, then we're gonna get into that another time. But kind of rambling right now. Let's see. So, oh, my boy Ace, I didn't even know he slid on here. Yeah, but honestly, for people that don't trade, this probably just seems like some mumbo jumbo making all this up. But the reason why I'm able to believe this stuff and take these trades is honestly just because of back testing and experience and just being on the charts. I mean, I've only been trading for like a year and some months, but a lot of time on the charts. So I'm confident in these type of setups. So I trade with just technical analysis. I don't care about the news, although prop firms, some prop firms don't allow you to trade news, which is annoying because I don't ever look at the news. I'm going just strictly off of charts. I honestly believe to some extent some news events pushed out, they're kind of like, or let's say price uses news events as an excuse to push price hard some days, you know what I'm saying? So not that the news events are fake or anything like that. I just see that as excuses to push price to certain areas, you know. Yeah. It sounds like some conspiracy theorist stuff when I say it out loud, but yeah, anyway, so like the trade off of the open of this, something like that, high risk to reward, something like that maybe. And usually before this happens, you have like some type of high made up in here, and I'll be targeting that, and that gives me like a good 1 to 4, 1 to 5. 1 to 6 is a good trade for me, usually for the areas I target. I can target higher RRs, but the probability of hitting those take profits before price wants to come and go and mess with the low is not crazy likely, unless I just go stupid tight. I'm speaking from a point of using the same stop loss size. You can of course increase your risk to reward ratio by making your stop loss smaller, but chances of you getting stopped out are a little bit higher, you know what I'm saying? But the thing that I do is I'm glad marking up that 1 to 4. I don't mind it at all, because as soon as price is at least a 1 to 1 for me, let's say, let me remove these drawings, bro. All right, so when price comes down here, gives me my entry off of there, and price, let's say, is currently at this area. I'll just put a line there so you can see. When price is at that level, like a 1 to 1, when that means it's equivalent to what my stop loss is. Let's say I'm risking $500. When I'm about $500 in profit, boom, my stop loss goes to break even. So now if price does want to push down here and break this area, then I'm not losing any money, because I honestly can't see like I'm willing to risk 500 for the trade. And let me see. All right, so you got let me put that back. So basically, when I was saying we're at that 1 to 1, so now I'm hopping in on a second entry, moving my stop loss to that break even. And since it's the same distance and same lot size as I was originally, then I'm still only risking $500 for the trade. So the same trade that I'm targeting up here, I'm looking for price. This position is now break even, so all this is free money up here. I'm playing with that money. I'm not losing any money on that position. But this position here, although it's not completely a 1 to 3, you can't forget about the 1 to 4 I already have running. So I got this 4 RR plus this basically 3 RR. So instead of this being a 1 to 4 trade, risking $500, it could potentially be a 1 to 7 trade, because I'm adding in a second entry where and I'm risking the same amount. And this is break even. So price does come down here and breaks this low after me triggering my first entry. I only lost $500, which when I was in initially. So I'm cool with that, because that's what I initially, and me risking $500. So the whole RR thing, the risk to reward, I'm risking 500. So 1 to 7, basically multiply 500 by 7. So now this is a potentially $3,500 winning trade, and I'm only risking $500 for that. I take those odds any day of the week. You feel me? So on that type of trade, you done for the day and potentially the week. Like if I can make $3,500 in the week, one trade, I'm chilling. But of course, you gotta account for your losers. So that's why you target high RR. So your losers are small, and so when you win, you're wiping out all your losses and you're making a decent amount of money. So instead of trying to always get my stop loss so tight, I go with the bigger stop loss and look for a second entry, But getting this timing on the second one, this is probably the easiest way I can go about doing it. I want to go about it robotically, because if I'm in a trade, I'm pressing a buy, I'm not calculating that distance, and I go with the same lot size, but I'm not even break even on that first position, then I'm cheating myself out of it, because if price goes and retrace a bit and I don't even trigger my break even, and I got a second position, and now I'm losing a lot more than I initially chose to, because I'm all over the place. I'm unorganized. So you got to get organized with your entries. People stack up trades because they see the trade going in their favor, but price can easily come. Let's say you buy right here, and you take some more entries up here. You're not 1-to-1 yet, depending on where your stop loss is. You see this big retracement. You got 2 more positions in right here, same size as this one. You're not losing a lot more than you want to, and you're still holding this position, although you might be in a little profit. Price, you're scared at this point because these 2 losers are way more than what this first position was. So you really want to think from like the beginning to the end of a trade. So all this is going on in my mind when I'm looking for a trade. Like, trading is simple in the sense, marking up these zones is cool, but when it comes to managing your emotions, your mental, and your money, your profits, and all that, your risk, like, that's the hard part of it, So yeah, I could talk about like risk management all day, like, because that's honestly what trading is. People like focus so much on the strategy stuff and all that. I mean, I do too. You always want to be honing your strategy, because that just basically increases your win percentage. If you have the higher your win percentage is with your win rate, or your win percentage with your risk reward ratio, that's how much more money you're seeing in your pocket. And it's substantially more when you increase your risk reward and your winning percentage. So you can have good risk reward already, but if you're now winning 50% of your trades instead of 35, like, you're seeing that much more money. It's crazy. I might go ahead and show you guys the equity simulator on the Ftmo. I showed it in one of my other videos. Yeah, I'm gonna hide it real fast because I don't want you guys. Hello, hello. Oh, damn, I didn't realize my mic was muted. I'll put it on chat. Can't even see the chat. What is going on? Oh, okay. Appreciate it, man. Yeah. I'm telling you, learning this streaming stuff has been killing me. It's all good now. Yeah, bro, I don't know what's going on in my chat. I haven't even been on that screen. You over here watching me mumble? I'm just talking. I'm not really even trading tonight for real. I'm gonna hop into some back testing in a sec. Probably gonna be on here until about 2 a.m. because I need to do some practicing if I'm really gonna do this this challenge. You feel me? Yeah, I had you. I think I still got you up. Or are you done streaming right now? Let me shout out my boy. Shout out my boy Ace Sliders. He with the streaming stuff. Does some video game stuff. We're playing Valorant and what's his Team Fight Tactics. Plays a little Apex and stuff too, but he hasn't put that on there yet. But yeah, check out his channel though. Check him out. It's Ace_Sliders. Sliders with a Z, the number 1. So yeah, check him out. Check him out. Yeah, so anyways, what I was saying about this little equity simulator, basically what it is, it shows you, it's like how can I say this, they basically coded this thing. Oh, sorry, I thought I had heard 2 different things. So it basically shows you what you could potentially be profiting with certain trades, or like certain risk parameters and risk to reward ratios and win percentage. So I'll go ahead and break it down. So your capital is the amount of you're actually trading. So I plan on trading $100,000 account. And let's say my win rate right now is only like a good 35%, but my risk to reward ratio is on an average. I'll say 1 to 3, since that's like the least I try to get. I'm not sure what my win rate actually is. My win rate is actually much higher when I'm back testing, so that's good. So the iterations is basically how many times that this little simulator is gonna run through it, like how many scenarios there are. So how many trades. So this 100 trades is gonna be taken over. Basically, the more iterations, the more data, and the more reliable that data is. If you just put 10, then that's only based off of 10 trades. But you can scale it up to 100 by multiplying it by 10. But it's better to actually put in the amount of iterations you want. The number of lines is just basically showing you the different potential outcomes with these risk parameters, you know. So I like to look at about 5 lines, because anything more than that is start looking messy. And I only risk 0.5% per trade. So let's go ahead and run it. So for the challenge, I'm looking to get I'm trying to get 10%. Once you get 10%, you got the account. We got to grow at 10%, then you have to grow at 5%. Watch my Ftmo video if you don't really understand the prop firm. But for the most part, in the long run, I end up making at least 20% with these numbers if I'm only winning 35% of the time, and I'm staying true to my risk to reward, and I'm making that 1 to 3. And the minimum, like worst case I'm seeing, is like $93,000, which is which is good because you're operating within the risk parameters for the challenge. So no more than 10% loss, and you want to gain at least 10%, and then again 5% with the same risk parameters. So that's a good number to live by. If you're only winning 35% of the time, and if your risk reward is at least a 3, there's a great chance you'll beat the challenge. This is just like all estimations, of course. None of this is like certain, but gives you a good idea what you can make, or how well you're doing the challenge. You feel me? So right here, client area, you see your boy got that 100K challenge ready for it. Don't be trying to steal my login credentials or whatever. You need the password, but yeah, I'm ready to take that challenge. I'm hopefully gonna take it next week because I mainly trade GBP, USD, US30, and those are my main two, honestly. If I'm being honest, and I don't want to only have half of the things I want to trade because US30 is kind of like pushing all-time highs and there's not much data to go off of. Unless we start falling down, then I can start selling the market down. But I don't know. I haven't looked at US30 tonight, so let's go ahead and give that a quick look. Is that rapping? My bad. I can't type. So you see we got US30 pushing nicely. If you're an investor in and you have like US30 or you have stocks in, and let me just go ahead and show you guys because if I keep trying to, so the Dow 30 or Dow Jones, whatever you want to call it, I just call it US30. All these companies, so if you have stocks in most of these companies, actually not even most, maybe half of these, then you're doing pretty good in your stocks. Like I guess best case you're up about 10% with like American Express. I don't know if that's for the year or like what that's based off of, but basically the average of these 30 companies is higher than this. It's not higher than it's ever been, but you see the market pushing up heavy. So good from an investor standpoint. But from a day trader's standpoint, I'm not seeing a lot of good trades. So honestly don't look like a great trading week for me, if we're being honest. So I definitely would not want to be taking the challenge in these conditions, you feel me? So these are like potential pivot points that I can see in the market. I'm obviously bullish on this pair. You'd be stupid to try to sell this right now and expect it to go all the way down here. Like for me to start to think price is going to do that, you want to see something like this where price starts to break a low and then that low itself is broken, then you could be like, all right, we're pushing down. But when you pushing up like this, although we're losing a bit of momentum here, you're not seeing these huge pushes like that. It's starting to stall a little. I'm still not selling. I'm not selling this down. That would not be smart at all. Oh, snap. Sorry, y'all. Yeah. Say you sound sick. I probably do, bro. I don't know why I'm typing to you and I could talk to you. But yeah, I probably am sick. Well, not sick, but like, I don't know. I'm scared to say I'm sick in these COVID conditions, but I don't know. I do got some sniffles though. It could just be congestion, but I'm chilling. Let's see. Yeah, US30. So as I was saying, you'd be dumb to try to short this market right now. So honestly, look for pivot points like this for price to go and touch and continue catch that ride up until price decides to push down. Yeah, this would have been a beautiful one here. Yeah, I had to drop down to the hour because you're not gonna find anything on the 4 hour. Oh, that's even a good 4 hour. See this order block here? If I was looking for the market to continue up, like I said, like it was doing at this point, huge push up, I'm looking for it to continue up overall. And that would have been a nice trade there. probably break down to the 5-minute. See if it shows like a really nice entry. Where is it? Oh, right here. It's this area here, actually. So you guys remember what I said about price coming down on the 5-minute, and then you see that break of structure in that 5-minute. In all honesty, I probably would have bought this here, but I wouldn't have been like looking for it to go crazy high because we barely mitigated this area, if at all. So I would have looked to buy here maybe. And when you're back testing and looking at the stuff, be honest with yourself. Stop loss somewhere in here. In all honesty, I probably would have got stopped out here, and I definitely wouldn't have wanted to hold it that long. Well, let me see how long that was. So from like here to here, oh, that's only like an hour or like 2 hours. So if my stop loss is low enough, I would have caught the move up. But yeah, break of structure, I would have been in there. Stop loss somewhere in here. Yeah, I would have got stopped out. I'm not gonna lie. So I would have missed that one. Although you got some good momentum pushing up through the 50 EMA right there. Wouldn't have wanted to get that, especially after all this consolidation. Like after seeing something like this that's pushed down, I'm like, okay, we're probably gonna push down into this zone for the actual push up. So like these first entries I take off of these trends, looking for that reversal, I'm not entering when like high risk, when we're obviously pushing down. So you trying to catch the bottoms and you're risking your max every single time, and you're gonna get cooked by the market. Look for those confirmations. So right here we actually mitigated this area. You don't have any break of structure. So you come down, push here, price didn't break that 50 EMA. You barely have any momentum breaking this high there, so I wouldn't have been in there. Mitigated more of this area, maybe like the 50%, a little bit beyond the 50%. You got this push up into this. Didn't necessarily break the 50 EMA, but you did break structure. So let's say if I did get in here, stop loss somewhere in here, probably about there. Probably would have got stopped out before the actual move on that one. So that could have been 2 L's. And then this one, let's see. So you got an actual break of that. So this could have been another entry like right here. Break of structure, broke that 50 EMA, stop loss in here. And then in this case, I probably would have targeted this high, since usually when you see price start to play around in the order block like that, that's when you know you're gonna get a nice move. Usually I look for that second touch, like price to mitigate the area, come back, touch it, then you see this huge move like this. Like that's a beautiful trade. That's if you catch all that. But I would have probably either targeted here or like here with the first or with the second entry somewhere like up in, I don't know. If I was like looking for the longer move, I probably would have bought in here like a second, but that's pretty high up. I usually like to buy about 1 to 1. I could target the same area. So that's like a 1 to 2.4. So that's like about a 1 to 3. So I would have won back those two there and made like a little profit. So that wouldn't have been the best trading day, but I would have came out profitable at the end of the day. Yeah, so that's just me being honest with myself with some of the trades. I would love to be like, okay. And this one, the one where I didn't mitigate the area, that depends on how impatient I'm feeling. And if I truly believe the market is going to go ahead and like give me that big push up, but higher probability, I couldn't. Like price does do this sometimes. It'll come close to the area and then you get that big push off like this right here, and it won't return for like a while. So that's why I take like a low risk setup in there. So I may not even have risked like the whole 0.5% like I would have done. I would have done like a 1/4%. This is a 100K account we're talking about, so that's $250 right there. So not bad at all. If you're targeting like a 1 to 3, then that's a $750 win. Not bad at all. But yeah, so I could have avoided this loss here if I would have just stuck to the plan. But that's depends on how I'm feeling in the market that day. So let's go ahead and get into some real back testing. I'm just cherry picking setups right here. US 30 or GBP USD. What should we trade or what should we back test? I don't know if Slider's watching. I'm asking him. USD or US 30. Back testing. Say that. Bro, you're clutch. I hella forgot that it does that when I click on that. All right. I was talking to myself again. All right. Yeah, so I don't know if you was able to even see what I was talking about. I was talking about scrunching price up to see where I'm actually gonna get in, because I don't want to see the overall direction of price. So you go over here to your replay tool. I don't know why I was struggling to find that so long. Can't hear. You should be able to hear now. I know this chat is like hella behind, or like the video at least. Where's the 18th? So the 18th must be a weekend, because it's not letting me select that day. Yeah, the 18th is a weekend, so the market is closed for trading that day, so I'll do the 19th. All right. So that's how you pick a direction. I see people back test and they literally scroll like this and then they just click it there. You obviously saw prices where it's going to an extent, so don't do that to yourself. You're only hurting yourself. I like the challenge. All right. I don't like when the market's like this. I like when it's in the middle, because then I can ping pong the market. I can catch it up and down and maybe catch my big move like in whatever direction it's going. So that's usually what I look for. But all right, let's take this to the daily chart. I do a top-down analysis. All right, I'm not seeing a crazy trade to take. Order block. Say yes. I'm assuming you can hear me now, but yeah. All right. Type in pineapple if you can hear me. Wow. That is a beautiful order block. Like, I don't know what it is about the ones like this. I just like them. I like these. And I include the wick of the next candle if you haven't noticed when I'm drawing these. Because the wicks, that's people trade supply and demand. The wicks hold power, especially on the higher time frames. So just know that. That probably gave a decent push. Yes, it did. That's a nice order block. Although price somewhat mitigated that, that's a clean order block for me. I would look for that second push, although this is a bit later. That would have been a nice trade off of there. So I'm sandwiching price now, basically, like I always do. Imbalance here, like I was saying, order block there. That's how I draw them up. Although we're pushing down for the last few days, it looks like. So this is September 19th, September 2nd. So yeah, for like a week or two, we were pushing down. These little colors, these little skinny purple, that represents a Sunday. So you have 1 week, 2 week. So that's like 2 weeks worth of trading right there. So I use this indicator basically for my back testing. So I know which day of the week I'm on, you know. And this is the sessions indicator that we talked about before. So you can see what session you're in. And let's start at 50 EMA up. And honestly, looking for a buy off of this area. Big push up. You can see something like that. You can see something like this. Although we're overall bullish, so this is when you consider your overall trend. I'm going to look for price to do something like this. It can very well go down, push up, and then continue up for the big move. Or price could go up here first, then hit this, then give me that big move. So I have a bullish bias on this. Although I have a bearish order block marked up, I'm looking for price to go up. Like, for the most part, like, look at this. It's like, who would want to sell that long term? Nobody. But the market does what it wants, so you got to be ready for anything. So let's go ahead and remove these drawings. Ooh, I did not want to remove everything. All right, pineapple. Yep. I'm weak. All right. Let's go to the 1 hour. 1 hour is the lowest time frame I draw up my order blocks, because there's so many order blocks on the lower time frames, and you might see price push off of it a little bit, but it's not a good enough trade. I don't like trading the very low time frame so much, because you have to consider spread and commissions and those kind of things like that, and it eats away your profits. Although you can make your money in minutes, you know what I'm saying, but not high probability for me. This one, I might consider a little trade off of that. Since this is the 1 hour, I put this as an order block refine, different color. So that's just me mentally. I see this, I know it doesn't hold that much power. We got a nice little push off of that already. Like, I sell it open. I love trades like this where it barely touches the open and it just shoots away like that. And with a small order block like this means it's a small stop loss. So I would have been here, something like that. Targeting something like that. That's a 1 to 7. That's a beautiful, beautiful trade. So we might see a second bounce off of it, and then temporarily maybe break some type of structure it creates up in here, and then continue up. So, but right now I think it might continue down. You got some liquidity sitting here, double bottom, so it's gonna definitely take that out. Okay, so now we're hitting this area. I'm on the 1 hour time frame. I dropped down to the 5 minute. Because the border is the overlay. Let me see. We don't need to see the whole thing, as long as we can see most of it. But thanks for the heads up, though. I'll try to keep it centered. All right. So 5 minute. This is where I'm looking for my entry. This is where I start looking at price structure or price action, just looking at what price is doing. I'm looking at this 50 EMA. I'm looking for some type of stall here. Hopefully we get like a spring, a big push down, break a structure here, some type of retest in that area, and boom, that's it. And then we're in. I'm entering right here. So that's where I'm entering. So something like a buy there. If it happens right at the 50, then, I mean the open, then cool. Stop loss, something like that. Targeting something up in here. Hell, I'll even target something like that. These type of trades. Ooh, I don't know. We see it might bounce around in this area a bit. You got a lot of momentum pushing down though, and we're far away from that EMA. So don't be too eager to enter and stuff like this. So let's go ahead and see what happens. So impatient me. If I'm really trying to catch this setup and not miss it, if there's FOMO, like fear of missing out, I'm taking this trade right here, right off of the open. I probably shouldn't, but I am. But since I am and I know it's a risky trade, I'm gonna go low risk. Wherever my stop loss is gonna be, I'm just gonna only risk, instead of 0.5%, that 1/4%. So 250. So if I want to be impatient, enter there, then boom, I will. But I'm gonna wait and see, because that's a lot of momentum behind that. So I'm just gonna see what happens. But that's for an impatient me that really wants to take a trade. You got to bounce off of the open. So I would have saw some kind of profits. At this point, you're still in profit. All right, now you broke this low here, which where my stop loss probably would have been moved to, and somewhere in profit, maybe even all the way up here. So I would have came away with some kind of profits. Although I only risked 1/4%, I probably would have got, let's say, like $400 or something off of that, roughly. Not bad at all. That's not a bad trade. It's better than losing. I'll take a penny over losing a trade. I don't care. So, all right, let's get back to it. Boom, disrespected. That's why I'm not. That's not my high probability. I gotta look for some type of price action that break a structure and break it at 50 EMA for like my good trades. That's when I risk that 0.5%, so I can make that money. All right, so here, still look at that momentum, still pushing it down. So this could be our spring. So that spring right here I drew, where we broke structure, a lot of bearish momentum pushing down, and we broke that. That's gonna entice people to sell the market, but I'm looking to buy it. Like, I know we've been pushing down, but I respect these zones heavily, so I'm looking to buy this area. So we got price doing what it wants to do, push down again. So now right here, when we start approaching that 50%, and if you truly want to see your 50%, you can take a Fibonacci, drive from the top to the bottom. If your 50% is actually enabled on your Fibonacci, you can see it there. And I'll draw a little horizontal ray. You can add an alert if you want. Oh yeah, you can't add an alert in replay mode. I'm bugging. So if I'm really looking for price to get to this area, then I'll set an alert or whatever, and then phone gets alerted if it gets that area. So anyways, let me get some water. I've been talking nonstop. I'm probably not sick. I probably just needed water, bro. All right, anyway, so this is that spring we're looking at. We're still pushing down, breaking structure. I'm not in yet until we break some type of high and we break this 50. That's what I'm looking for. 5-minute time frame. All right, we're pretty damn close to that 50. I like that. Okay. All right, still not in. I'm still not in the trade. We never broke that structure. We're still breaking lows. So down here, when you start getting down here, like pretty much past like the 75% mark, that's when it's like, like we might continue down for the day. There's no reason to try to catch the bottom of this market when it could just be a bearish day. So be real with yourself. That's why we have our confluences, to keep us out of the market, to prevent losses. So I will watch it. Yeah, something I'm trying to learn now is to just not, I don't know, if we break this high and break that 50, I'm in. But yeah, something like this is like, it's really, like when I saw this momentum from like here, let me show you in like well, you saw it on the 1 hour time frame. That's just straight down motion. It's scary to go in the opposite direction of something like that, especially something on like the hour time frame. If it's a 5-minute candle pushing down like that, I don't care. I will short that all day. But 1 hour, the higher the time frame, the more weight it holds. So it's scary to try to short something like that full risk, you know. So that's when you really want to consider all your confluences, because if you keep trying to catch that bottom, let's say I thought this was the bottom here and I buy there, or I think this is the bottom, I buy here, although I might see some profits, like it's not worth it, because the market's still pushing down. And who knows if I would have even been able to put my stop loss break even, because if it didn't break any type of structure or maybe got 1-to-1. Really no good place to put my stop loss down here, So we have these. Sorry, I had to crack my back. So we have these confluences and everything for a reason. So you know what I'm saying. This could be it here. You got some momentum behind this candle. Let's see what happens. Like I said, I look at these areas of the zone just as much as I'm willing to take a trade a little bit outside this zone for the buy, or I'm just as much willing to take it a little bit below it, but low probability at that point. So like I said, I'll risk low probability up here, low probability down here, because if it's gonna eventually go all the way up here or all the way up here like I was thinking, then that's a bunch more opportunities I could get into the market. So there's no reason to go full risk for a low probability trade when there's potential setups I could get in and take it the rest of the way up. So don't be impatient thinking you have to catch the bottom or that move. Although it's like just as much as I could catch this bottom, my risk to reward could be better on a trade midway in there, targeting that same area. Like the risk to reward could be much better depending on where my stop loss is at. So anyways, let's go ahead and see what happens. I like that right there. You can either get in here, you can get in. I low-key would have probably bought like right here. When I saw this candle close and then open to this one, I'm probably buying that right there. That's what you want to see. Some type of break of structure. Like we broke this high already. If I'm impatient, probably even in down there, but I'm gonna be conservative just for the sake of the video. And we broke the 50 EMA. Stop loss. I'm gonna go a little bit liberal on this first one. I don't see us necessarily coming back down here. If we're going all the way back down here, then we're probably gonna break this low. And if we break this low, then I'm probably done for today. But it's a low probability trade. Still targeting this area up here. Why am I targeting this area? 1 hour. This is nothing but imbalance. This area has to be filled. So let's go back to the 15-minute. So let's say I'm in there, low risk. This is only a 4.51 trade. So if I'm risking low risk, $250, and I'm getting like a 1 to 4.5, that would be about $1,125 if my math is right. I think that's about $1,000. Let's just say $1,000. That's about what you'll get if this trade plays out. All right, so, and that's if I don't take a second entry, which I usually do. If I could catch a second entry on this trade, then my risk to reward ratio goes up a lot more. He said spot on the low time frame. I'm on the low time frame right now. I'm not sure what you mean by that, but I look for the entry on the lower time frame. Like I did my whole markdown, like these big zones I had from the daily and the 4 hour or the 1 hour. Then I go down to the 5 minute for my entry. I don't go to the 1 minute. There's too much noise. I'm not going to press it either, because when you're back testing, there's only so much data that the software has. So if I hit the 1 minute time frame while I'm back testing this far back in time, it's that many more candles it has to compute. And this is about the area where it would want to close out, and then they'll kick me back to where like current price is. It's annoying. So 5 minute is good for my mentality. It's good for back testing and depending on how far you go back, but that's what I'm rocking with right now. So let's see how this trade plays out. Nice. Second entry as soon as we broke this high. Yeah, I probably would have been up probably about here, to be honest. All right, let's say I wait till it broke this high. I'll be conservative for video's sake. Let's say I buy there. Stop loss would be about break even, because this trade would be moved to break even. like we talked about before, targeting the same area. So now, instead of this being a 1 to 4.51, like I said, you're not going to be able to see it since I moved the stop loss up. That was 4.5. So now we got a 1 to 4 right here. And this is break even. So I'm not losing any money on this first position I took. But the second one, I'm risking the same amount. Well, I'm probably risking at this point, since I'm starting to see a lot of momentum behind it, I'm actually going, instead of quarter risk on it, I'm going back up to my half percentage on the risk. Said like you were spot on. I appreciate it, man. I've only done it like a million times. I'll just be back testing like crazy. But just as much as I can catch the setup, like this can go around any minute. But this would be a beautiful day if I can catch a 1 to 8. So let's go ahead and see what happens on it. Got that. That's a lot of momentum behind it. I'm almost certain we might see that. So right here, where we at? We hit break even. So I would have been out of this trade in all honesty. But since, let's see how much money I would have potentially lost on this. So let's say this trade actually did go 1 to 1, which I'm about to measure and see if it did. So this area right here is 81 pips over on US 30. I was like, why is that so many pips? Oh, so 81.30 and this peak here. So we're above 81.30. So I would have been 1 to 1 on this. So I would have technically been break even on this trade as well. And all this, I would have been break even at, since that was 81 pips, I would have been break even right here. So although, like I saw some profits with it or whatever, depending on if I decided to partial some of the positions, meaning I take some of the money out, then I could either make a couple $100, or since I'm break even both and it came back, stopped me out, I would have made no money basically. So I would have been out of this position right here. This one would have still been a little profit. So seeing that, I could have closed at that position and took some of the profits or I could have held it and waited to add another position. But it came back basically right to my break even. And so let's just see what happens. Usually a day like this, I'm like, I might look for another position on it. You might see like a push down here. Something like a push down here, break this low. I think we'll break this low, maybe not that one. We'll break that. Or if we do decide to come up and break that one too, then we see our big move up. So I like to see like price screw around a bit before it actually continues on in the direction. So since I'm biased on it going in this direction now I can play around with price, manage my risk right, and try to catch some money. So those trades are out. Like I'm totally fine with losing money or not losing. Let me fix that. I'm totally fine with not losing money on the trade, like versus being mad that I didn't catch all those profits. I'm totally cool with going break even, because then that helps my risk reward. And like, remember that 35% win rate. If I can cut out as many losers as possible just by managing my risk like this, and when I do catch those 1 to 8s, those 1 to 9s, 1 to 10s, then it makes it well worth it, because those potential losers are only break even, so it's like they never happen. All right, so something like this is what I want to see before we get that second push up. So you can kind of use like the same little confluence. You get like a break of the 50 EMA and like a break of structure before you get in. Remember I said if price was breaking this low, then I'm seeing price going down. So at this point, I'm out of the market for the day. So that's basically like what a day of day trading would have been for me. Let's see. Yeah, that's all in. So that's all within the little bit before the London session to like mid New York session. So that's what would have happened for me watching the charts in that day. I would have been basically break even, maybe call it a little profit, maybe. And that's a good day for me. If you ain't losing money, you trading, that's a good day. So something like that happens. I clear my chart for the day, and I basically just go back, do it all over again. Start from my daily, see if I got any of those zones that I want to mark up. See, this whole candle, that's just what I was trading, but Actually, let me put my drawing back. Oh, I can't. I kind of wanted to see how it played out. Let me go back. It kind of kicked me out. September 18th or 19th. So you gotta respect that the market can do whatever it wants. So I think, where did I have that zone marked up at? Sorry, I'm trying to figure out where I was. I was definitely trading the 19th. Oh yeah, we were further. Was it that push down I was trying to trade? Oh no, that's the big push down that I was talking about. Alright. So our block was like somewhere in here, and I was trading all this in here. And this is when we get the big push up, break structure somewhere in here. There it is. Alright, so let's see what happens. And then price push down. Okay. Down. That could be the move there. That break of structure broke that 50 EMA. This could be the big move up all the way up here where I was looking for maybe. But I'm not trading that zone like that after it's been disrespected like that. I'm out for the day. And the next day there could have been something over in here to trade. Not really. Yeah, that would have been one of them days where I just wouldn't have caught the move in all honesty. So it's all good. Let's put it on the 15-minute. Continue to watch it, see what it does. Just gonna let it play. Yeah, that was the move I wanted. Just playing with the lows. I think we might push up again. Yep. Yeah, so it would have taken about 2 days to get where I wanted it, because I think I was targeting like all the way up here. Yeah, so we would have had a whole another bearish day. You had a bullish day after. I missed that move there. But yeah, man. Yeah, I appreciate you for watching, bro. That's basically how I trade, and how I'm practicing for this challenge. But it took me like 10 times as long to get through like 1 day of trading, because I'm talking about it, breaking it down. But usually that whole thought process is happening within like a good 15 minutes maybe. So I do probably like on a good session of back testing, I'll probably go through like a good week. Like a good week, maybe week and a half or something like that. Like, cause all that thinking and stuff just going on in like a couple, like 3 hour span, it's a lot. So that's a good amount of back testing for me if I'm like being that thorough, you know what I'm saying? So, but yeah, I don't know, bro. Hey, I don't know if you're still listening, but is there anything you want me to mark up? Like any like Shiba Inu, Dogecoin, Bitcoin, anything you want to see where it's going long term? I can kind of give you like my idea. Like those things are a little bit harder to like pinpoint exactly, like long term, than it's what do I want to say? Those things are kind of hard to pinpoint long term, but like with Bitcoin, I don't know if I still have it drawn up. I had a pivot point marked up, which is gone, of course. I think it was like somewhere in here. I don't know why I removed my draws off of Bitcoin, but price kind of broke through it a little bit. It was a decent little setup for a nice push up. Lucid, okay. Lucid. Hopefully this is it. They're part of NASDAQ. Fuck, it says they're part of NASDAQ. Or when was this updated? Nope. I'm just trying to see the companies listed. Lucid. I don't know, they could be under a different name or something. But I don't know. I think said they were part of NASDAQ when I clicked on it. But anyways, I don't day trade stocks or anything, but for the most part, technical analysis can be used, especially markets like this. There's definitely got to be some type of manipulation in there. That's basically what my strategy falls around. It's just that manipulation. I don't know what this is, but that is mad annoying. Yeah, I don't know what all those little vertical lines are. So let's see what Lucid is talking about. So something I never looked at before. I'm starting on the weekly or the monthly chart. So let's go to the weekly. So this looked like one of your good old pump and dumps, like AMC and stuff like that. Got a fat push there. This is something I would hold. I would definitely hold this. It's flat line right now. But if it gives you something like, I don't know, some type of momentum in the market, you're going to see another push up like that. It may equal out, it may not meet it, it may exceed it. This is something I will hold long term. But let's break it down to the day to day. Yeah, you're consolidating heavy. You see us just basically working in this zone. Some up and down all the way from here. Kind of broke out a little bit there, but for the most part, up and down in this. Break it down a little bit more. It's price mostly been. This is a choppy chart. Yeah, usually the stocks are like a little choppy to look at on TradingView. But I could probably hit another Lucid and it'll show a bit better. It did not. Let's go back to that one. I mean, overall, since September, you've been bullish, but that looks honestly like a lot of other charts and stuff we're looking at. I don't know if the dollar just fell heavily that time, like in September. Yeah, it fell pretty heavy there. Recovered a bit, but then it fell even harder. So for the most part, the dollar's been down for the most part. It gave you a nice push up, but it fell back down. That Lucid. So I think that affected the stock markets to some extent, or like almost all the markets. The dollar being down pushes things up, or anything against the US dollar is going to push it up. Lucid Group maybe. Yeah, I think this is the one though. Yeah, Lucid Group. Let's see. I see this being bullish, like as of now. Like if you're trying to buy in on this, sure, go ahead buy now, because I would honestly be targeting areas like this. It's only at $22 a share, $23. Wait, you have the potential to double your money if you just hold this for some months, or even if it's like a year or something like that. Yeah, I will hold. I don't know if it's gonna get up here right away. It might take some time, but for the most part, it's been consolidating. But if you think they're gonna pump this again, like they went back and did with AMC, I believe it was. I think AMC like saw some pumps and then it got pumped again. I think this is when they first started messing with it. Yeah, I remember that. And then it fell heavily. It basically lost all that. Went up a bit, about 50% of most of that. Consolidated a bit. Then you just see this crazy, just absurd push up. Like imagine seeing this on the Lucid chart. So that's why I would say hold that long term. if you believe there's gonna be that same hype around it like you had with AMC. This spike here is the same as that little spike you saw before on AMC before it went and just disrespected it totally. So, hey, if you think they're gonna pump it again, bro, like hold that. Like I don't see why not. From like, so something like if you're actually trying to hold long term, then that would be your Apples and your Teslas, which Tesla right now is literally at an all-time high. We're gonna see this in the news tomorrow. Like Tesla up 25% in the last week or some shit. Like I don't know. You know how they be with the stuff, but then everybody gonna be ready to buy into that. Then that thing gonna fall for a bit, and everybody gonna be down. Like, oh, I'm not making money. When you don't buy there, you buy here. You buy when it's down, when no one's talking about it. So, yeah, firm. I don't know if you remember our coworker talking about this one. I don't want to say any names, but he was talking about a firm. I think he said his sister or someone told him to buy a firm, and that thing went crazy. Like honestly, like in July, if you would have bought, you would have almost tripled your money. Crazy. Like the stock markets and everything are just crazy right now. And then look at GameStop. Although it hasn't exceeded its highest high, a lot of opportunities to like go and double, triple your money. Well, not a lot, like 3 opportunities. He said disrespect. But yeah, Shiba, oh my gosh, literally Shiba is, I thought it was at an all-time high for a sec. No, it's not. Shiba hit another all-time high yesterday, but I would not have bought there either way. After this, I wouldn't have bought here. Retracement, maybe. It came back down to this wick, covered up that imbalance. Decent buy. I don't analyze things like this too heavily. I just look at the general direction of where price is going. But Shiba, I wouldn't buy it right now. I would not, especially with all the hype behind it. Same thing they did with Bitcoin and especially Dogecoin. People went crazy with Dogecoin when it was pushing up. They was like, oh, we're adding it to as a form of payment for this and this and blah blah blah. All the hype, the SNL, this and that. It's just so much hype behind it, and then it just fell off heavy. Hasn't recovered yet. But Dogecoin, something I would buy right now for sure. Like looking like that Lucid thing. Like I think this got a bit more hype, or a lot more hype than the Lucid thing. So I would buy this and look for it to do basically what was it, GameStop or whoever, where they went and just went crazy. So Dogecoin, I'm a believer in that one. I see that going. So if I'm looking to flip my money like crazy, like risky flip it, then I'll be on Dogecoin. But if I'm looking for long-term growth, Bitcoin, although it is a cryptocurrency, so the retracements at sea are heavy. So if you're buying up here, be prepared to be down on your money for like maybe the next few weeks, a month or two, before it goes and you go and double your money the next year. So you just got to be able to hold with cryptocurrencies, because the retracements they see are crazy, because the pushes they see are crazy. So it's gonna fall just as quick as it rises. So that's what any market is. Something that trends up slowly is a good healthy buy. Like Apple, you could throw money in that here and there and be comfortable that like in the next couple of years you're going to see some kind of growth. Same with like US 30, NASDAQ, trending upwards like crazy. This is a pretty steep incline, by the way, so we might see some retracements down in here, and maybe not that low, something like that, before we continue up. Like a fall like this is the pandemic. It's COVID right there. He said big chillin' on Shiba. Swear. That's money. But yeah, man. I love this trading and investing stuff. especially once I have more money to throw into all these things. It's gonna be crazy. Portfolio gonna be looking crazy, bro. So that's why I gotta get this FTMO, this 100K, bro. I can start running that money up, and it's gonna start going crazy. Yeah. And I look at gold every now and then. Gold, and this is silver, I believe. Yeah, I don't look at silver. I haven't looked at silver since like whenever I marked up this stuff. When was that? Yeah, September of 2020. But I look at gold every now and then. I'll mark up trades on it and stuff. GJ's all right. I'm not gonna get into all the other currencies and stuff like that. Yeah, but bro said he out here to learn. I don't want to talk your ear off all day with this forex stuff. Let me put y'all on to another prop firm while I got you here. I've been talking his ear off about FTMO and taking this challenge. I'm gonna show you another one. It's called My Forex Funds. This is like a runner-up to FTMO in my opinion. Only reason I put FTMO over this one is just because of their reputation and longevity. It seems like they've been doing good. This company hasn't been around as long as FTMO, it seems. So not as much confidence in it when it comes to like reliability and company I want to be throwing all my money at. But if I had to say there's a very close runner-up, it would be My Forex Fund. So, for example, so you could take the 100K challenge right here with My Forex Funds. You only pay $500 to take the challenge. And then phase 1 of the challenge, you only have to grow the account 8%. And by growing it 8%, you have to abide by their drawdown rules and stipulations. So you can't lose more than $5,000 in a single day on the account. And you can't lose more than $12,000 overall on the whole account. So in a single day, you can't lose more than 5K. Over the whole course of the challenge, you can't lose more than 12K, which is 12%. If you're losing 12% to gain 8%, your risk is all off. So not good trading at all. So and then the second phase of the challenge. So once you do the 8%, then you can go and do the second phase, and you only have to grow at 5%. And it's kind of tricky. They give you more time for the smaller percentage growth, so the confirmation there or whatever. So it's pretty sick. I look at the 100K because I feel like that's a decent amount of money to like go and change people's lives. You feel me? Let me look at the plan, break it down a little bit more. Show you a reason why I think this is a good runner-up. So the 8% growth, or the 8% target, is 2% lower than FTMO, so it's easier to complete. And while they have the same risk parameters, actually their overall drawdown is 12%, FTMO is 10%. So, but honestly, if you get in that low, it's gonna be that much harder to get up to that 10% growth or 8%. So it's the same distance because it's from 12 to 8 and from 10 to 10. So it's all 10% basically in difference. So that's a good reason to go with them. They have a nice scaling plan if I can find it. Let's see. How many accounts can you have with them? I believe you can have a maximum of 300K worth of trading accounts. Like imagine doing 1% a month on a trading account with 300K. That's $3,000. A lot of people can quit their jobs with that kind of money. But it takes work to get to that 300K. And honestly, if you're good enough to get to that 300K, you're not only trying to get 1% a month. That's easy money. Let's see. EAs is basically like bots people used to trade with. Something I'm gonna get into eventually. Let's see. When will I receive my 112%? I didn't know this. So like with FTMO and this one, I knew when you complete the challenge, they give you your $500 back that you used to take the challenge. So if you pass the challenge, you get your money back. But they're actually giving you a 12% increase of profit on your entry, or the fee you used to pay. They give me a 12% increase on that when you pass the challenge. That's crazy. I haven't seen that yet, so that's sick. Let's see. How often can you get paid? I believe they have bi-weekly payouts. So if you run a bag up on this thing, hold up. Okay, they actually have weekly payouts. They have weekly payouts now. I haven't looked at this in a while. This is crazy. So they have weekly payouts. You can make. So today, let's say if I were to run a bag up and got $1,500, I would have been chill for the week. I would have been like, all right, let me cash out for the week. That's nice. I like that. I don't know. I'm gonna have to mess with them after I max out my Ftmo account. How can you receive your payment? I believe they're doing like Bitcoin, or Ftmo now does Bitcoin payments. I don't know if they do payouts with Bitcoin yet. Let's see. They're asking about EAs again, but I believe you can. There's some stipulations behind it. Can I hold trades overnight? Yeah, you should be able to. Yeah. I'm sure you can merge your accounts up to a maximum of 100K per account. Wait, what? You can merge accounts up to a maximum of 100K per account. Okay, that's a little weird. I'm gonna look into that a little bit more. Oh, that's rapid. Oh, okay. This isn't their evaluation. So they have. Okay, I thought that was weird. I was like, that sucks if that's the case. So that's for. You want to look at their evaluation ones if you're comparing it to Ftmo. They have these other weird challenges you can take. Okay, I thought that was weird. I want to look at that weekly payout. I want to make sure that that's actually. Is it 9 proof of address consistency? I receive my payout. How often? That's accelerated. Yeah, let me go back to the evaluation. I want to see how often they get payouts. It said their largest accounts can scale all the way up to $2 million. That's just absurd. Oh yeah, they still have weekly payouts for the evaluation. That's sick. Like before this, it was like monthly payouts. My homie went to bed. Before this, it was monthly payouts, and that was a long time to wait for money. And when bi-weekly came out, that was a little insane to see. And let's see. So what's the other one? Weekly payouts. Man, I'm getting tired myself. I was just trying to keep homie entertained while he was on here watching. Just talk his ear off about Forex and trading and all that type of stuff. But either way, if any of you that watch this in the future, if you make it this far, please leave a like and subscribe. I will be dropping more of these daily. I don't want to say daily. I don't want to lie. Each time I trade, I'm on the stream. Unless I'm doing a challenge. I may not stream every day of the challenge, but otherwise I'm streaming when I'm challenging, or when I'm doing the challenge and trading, or when I'm back testing. Ooh, that was probably an ugly face. Let's see. I don't know, bro. Yeah, I'm trying to think of anything I may have forgotten, but yeah, I'm tired. It's 2:35. I had a long weekend, so your boy is about to get ready to KO. So yeah, if you made it this far, like, subscribe. I'm gonna be doing this more. Hopefully, it's gonna pretty much be the same thing, but the back testing may pick up at a quicker pace, so you see that going a little faster, So that's gonna be what it is. Let's see. All right, So yeah, let's go ahead and call it a night. Let me get it. All right, so I'll holla at y'all. Y'all take it easy, stay safe, and love y'all. Subscribe, like, all that good stuff, comment, and I'll see you later. Yes, sir.